Hey, so I've mentioned on this channel before that one of my favorite investments right now is Prosper.com. Now, this is not the best investment strategy long-term for everyone. This isn't the thing that you want to put all of your money in. This is one of those things that if you have extra money that you want to invest, and if it lines up with the kinds of investments that you want to do, it's not a bad thing to consider. I would say it's more reliable than Bitcoin, but far less reliable than something like your Roth IRA or 401k. That being said, like I said, I really like it right now. So I want to show you exactly how I'm invested in Prosper.com, kind of my investment strategy, and how my investments are doing right now. So you can see right now I have $12,039.09 invested, and that's giving me right now an 18% rate of return. In the past, you can see it's given me as much as 28 or even 29% return, but right now it's stabilized at around 18%. And that's simply because as these loans mature, some of the loans get defaulted, they don't pay them off, and some of the loans get paid off early. Both of those scenarios reduce my rate of return a little bit because the projected rate of return, that's calculated by the people making minimum payments for the whole course of their loan. Personally, I want them to pay it off early. I certainly don't want them to default on the loan, but it would be a good financial decision for them to pay off the loan early. That would save them some interest. So I'm perfectly fine with a lower rate of return if that's what it means. Now, I can't remember exactly where I read it, but somewhere on their side, it does say that the average rate of return for these things is somewhere between 7 and 14% or something like that. So 18% is actually really, really high right now. And 28 or 29%, that's really unbelievable. I couldn't really expect to see that long term. But as you can see right now, it's kind of stable at 18%, and I'm pretty happy with that. I'm not sure where it is on the website, but in the mobile app, I can actually see a visual diagram of all the notes that I have, the types of notes that I have, and the risk factors and those kinds of things. Personally, my investment strategy with all this is high risk. As long as borrowers don't default on their loans, that'll bring the highest percentage rate of return. That being said, I do want all of my money working for me, and if you designate everything towards high risk, from what I've seen so far, there's just not enough loans out there in order to invest all of my money. How I got started with this personally was I invested $100, waited to see how it would do. When I saw it was doing well enough, I put another $1,000 into it, waited for a few months, liked what I was seeing, and then started putting $1,000 into it every month since then. That's what I've been doing now for the course of this year, and I'm liking what I'm seeing. I just set it up to auto invest. It'll auto invest based on how I want it allocated, so I can just set it up and forget about it. That's exactly what you want for an investment strategy. Now, long term, do I expect 18%? Probably not. For a lot of these loans, they're still really early in the process. If it's a 3-year loan, then we're only at max about a third of the way into them. There's still plenty of time for the people to default or pay off their loans early. So like the website itself says, it's probably going to be closer to 14, maybe even 7%. But even then, I'll be happy with that. The S&P 500 gives you somewhere between 7 and 12% every year. And this is not my primary investing strategy. I don't recommend you make it yours either. Do your Roths first, do your 401k first. And then if you have extra that you want to invest, this might be an option that you might consider. The most important thing is to do your research and do what works for you, whatever lines up with your investing goals. Do that research and you'll have it figured out. Hey, if I can do it, you can do it too. I'm just an average guy.